I would just like to welcome everyone to our weekly career chat. We are very happy to have Dr. Gilbert Rogers with us, who is our Director of Student Financial Wellness at the University of Tulsa. And he's going to talk to you today about the karma of credit. Dr. Rogers, I was talking to my husband about this, and he was like, yeah, well, we probably should have had this when we were in college.
Same for me. I agree.
Yeah. And it's just a very, very great topic, especially now with everything going on and just getting everyone started on the right foot or back on the right foot if you are past the college years and need some help. So, Dr. Rogers, I'm going to turn it over to you.
All right. Well, thank you so much, Dean Thompson and Tawny, for the opportunity to come and speak about credit. As Dean Thompson mentioned, it's something that is extremely important. And just by understanding the basics, it can make a huge difference when you go to make purchases, larger purchases. So today's career chat is going to last roughly 30 minutes or so, but only expect about 15 minutes of me talking. After that, I hope to have an open discussion where we can talk about credit and you all can ask any question you have related to credit, and hopefully we can get you answers to those questions. So without further ado, I'll go ahead and get started here. So I have to add in a plug for financial wellness. As Dean Thompson mentioned, I am the Director of Student Financial Wellness. We are still fairly new to TU as we go into our second year with financial wellness. Our mission and our goal is to financially empower students through education and engagement. We want students to gain a basic understanding of how to manage their finances and make sound decisions while they're in college, so that once they graduate, after those 4 years are up, they can kind of hit the ground running and start making sound decisions with their personal finances. We offer one-on-one financial counseling. We're still doing virtual financial counseling with students. We're also going to do quite a few workshops this coming semester. We're in the process of planning a number of workshops, personal finance related workshops. So again, our goal is to just provide financial education to those who need it, who want it. And we've also worked with a number of staff members as well. So this is just a little bit about our program and how we are here to support TU. A little bit about me, so that you know something about the person that's facilitating. I am a self-proclaimed financial literacy guru. No, I'm just kidding. But I do enjoy financial wellness. I really do. It's really something that I think is extremely important. And as Dean Thompson mentioned earlier, it's something I wish I would have had while I was in school. Now, even though I was a finance major, we tend to spend more time on the investment side or the corporate side of finance, so to speak, instead of the personal finance side. Now, I took a few personal finance courses, but I wish I would have gotten more about the ins and outs of credit. So hopefully you get something from today's presentation that will allow you to take steps in that right direction, or to right or wrong, or to just make better decisions when it comes to credit. So to sum up my bio, I have spent the greater part of the past 8 years in some financial education capacity. So either doing financial counseling and coaching for the Army in Fort Knox, Kentucky, or researching financial wellness and financial education. I was so passionate as I was working with service members doing financial counseling and coaching, I decided to make that the focus of my dissertation. So that hopefully gives you a good idea of why it's so important and how involved I am in financial education. I also volunteer for organizations, and right now I'm on the advisory board for the Financial Empowerment Center that they're bringing here to Tulsa. So just a few examples, but hopefully it gets the point across that this is something I'm passionate about. Hopefully you see that as we move on and you visit or speak with me. Now, what specifically will we cover today? I just want to scratch the surface with these topics. One, talk about what exactly credit is. Then from there, we'll talk about why it is important, because it is important to establish a level of relevance, meaning, okay, I understand what credit is, but how does this apply to me and my situation? So I'll spend just a minute or two doing that, and then I'll then talk about what you can do now. So a few action items that you can carry once you leave this career chat. So credit defined. So according to Bankrate, credit is, now I promise you, this is the only time I'll read a slide to you, but I just want to get this definition right. But according to Bankrate, credit is the measure of trust that one party has in another party's ability to receive a resource now and pay for it at a designated point in the future. Now, to explain that further, I want to give you just a quick example. So one example that I always use is imagine your friends. Hopefully each of us, we have 3 friends that we have known for some extended amount of time. And when you think about your 3 friends, imagine all 3 coming up to you at the same time and asking to borrow a set amount of money, whether it's $20, $30, $50, how much ever it is. Now, we're going back to the college days when they may have come up and asked you for something. You can kind of sort of, gauge through your interaction, through your experiences with those individuals, when they would likely pay you back the money that you loaned to them. Now, with my friends, I could easily think of 3 where one of my friends would pay back how much ever money how much ever money was loaned to him or her, loaned to them within that designated time period. So if they say 10 days, it will be 10 days. Another friend, they may pay back in 3 days, but they may say 10 days. But that third friend, they may not ever pay me back. It I may better classify it as a gift because I won't get the money back. But still my friend, I'll still love them. We'll still be close as ever. But it's a matter of understanding that individual, and you have history with that individual. So you have a good idea on, how they will handle that situation. But with creditors and lenders and financial institutions, they don't have that same history. So what they have to evaluate individuals on are the way that they handled credit in the past. And that's what they will use to make decisions on how much money to lend, under what terms they will lend money to an individual, or how they will set up that contract or that agreement. Now, as it relates to credit and on your end, what you do, the goal for you is to build up your credit as much as possible so that those terms are more in your favor than they would be if you had not taken the time to build up your credit. Another way that I kind of summarize what credit is I always say that it is your resume in the world of finance. That's another way to look at it. Now, how does it relate to you? So let's talk a little bit about why credit is important to you right now. So if you're coming to school, you're here for 4 years. Once you get out, you want to get a job. One way in which your credit is evaluated or could potentially be evaluated is through your employment opportunities. So some employers will take a look at your credit and make a decision based upon how well you have managed your trade lines of credit in the past to decide whether or not to offer you an employment opportunity. It could come down to you and another candidate, where that candidate has a better credit score, so to speak, or a better credit situation, and that individual may get the job. So that's one way that it could impact you. Another way that individuals don't think about a lot is insurance. So when you go and you apply for auto insurance or mortgage insurance, one thing that they will do is they will take a look at your credit. Now, they will not go solely on your FICO score, but they will go off of your credit history, and that somehow goes into the algorithm that they use to decide how much to charge you for premiums, or how much you will pay monthly, or however you set up those premiums, how much you will pay. So you will likely be charged more if your credit score is not as high than if your credit score, you'll be charged more if your credit score is low as opposed to your credit score being higher. So these are 2 immediate areas that credit can impact your daily life. Another area that individuals may not think about, cell phone plans. Now, if you're still on a parent's plan or still on someone else's plan, you may not have to worry about it now, but eventually you will start your own cell phone plan. And when you go and you apply and you submit the application and everything, they're going to do a little mini credit check on you. to see if you actually qualify for not having to put down some sort of deposit for that new cell phone plan. So these are ways in which credit impacts you. Another thing to think about, financial institutions. So if you're going and you're looking to secure a loan for a new car, or if you're getting a mortgage, or if you're looking to get a credit card, they're all each of those situations will result in an evaluation of your credit history to make a decision. And rental housing and utilities, those are two other ways in which your credit is evaluated. So in some form or some shape, form, or fashion, you'll likely fit into one of these little areas where your credit is being evaluated. So that's another reason why it is extremely important for you to get that credit score as high as possible. That way you pay less in the form of interest, or you're not required to put down a security deposit or anything like that. So it is important. I have utilities there because they will also require a security deposit to offset the risk of them, you setting up a new, whether it's electric or whatever the utility is, and then they require the security deposit so that if for some reason you don't pay, they have that to kind of offset the risk. So that's why utilities will take a look at your credit. Now, I did want to take just a second to talk about how your credit is evaluated. So I defined credit. I told you what exactly it is, why it's important. But now let's talk about how it's evaluated. So what happens is your credit history that's reported to the credit bureaus that are out there, the three major ones, which are Equifax, Experian, and TransUnion. They have a monthly reporting where information goes to them. They put it into their little algorithm, and then they come up with a credit score. Now, that credit score is basically the summary of your credit history, and that is how individuals make decisions on how much to lend, what terms to lend under, and what exactly to put into the agreement. So credit reports are kind of the summation or the information of your credit history that's been reported to the bureaus, and then they come up with a credit score that's kind of a summary of that credit report, and they use that to make decisions. Now, one thing that I always highlight is the fact that you have two major credit scoring bodies out there. You have the FICO score, which is the most common. So 9 times out of 10, if you go and apply for credit, they're going to take a look at your FICO score in order to make a decision. Now, the Vantage score is out there. It's a lot less common, but more often than not, if you're receiving some sort of free credit score through some credit card or agency or something out there, they're likely using the Vantage score. Now, they are different. They use similar weights when factoring or when coming up with your credit score. However, they are not the exact same. So just personally, if I'm applying, if I know that I'm going to purchase a new car and I'm curious about my credit score, I would definitely pay a couple of dollars just to check my FICO score as opposed to the Vantage score, because you want to know what your score is for the scoring system that will be used to evaluate you. So the FICO score is the most common one. Now, there are other credit scoring systems out there, but FICO, as I mentioned, dominates over 90% of the market, and the Vantage score comes in second. But there are lots of others out there that are trying to gain traction. Now, one of the things that I mentioned is, as I've discussed how credit is important, something that's oftentimes overlooked is the fact that you must protect your identity. Because if you don't protect your identity, your credit can really go into shambles. And it may be something that it may not be any fault of yours, but one of the most common crimes that's occurring now is identity theft and fraud. A couple of things you can do to ensure that your identity is protected is, one, monitor your credit report. See if there's anything suspicious that's showing up on your credit report that just doesn't seem right. From there, you take it on, or you take on the responsibility of figuring out why something is showing up on your account that is either invalid or fraudulent. And I'm sure there's a huge spike in fraudulent activity out there because we have more and more on the internet from home now. Protect your passwords. So if you have a password set up on the computer, use that two-factor authentication, which means you add that second level of security when logging into an account. A third thing that I mentioned just real quick is if you're shopping online, always use a credit card. Never use a debit card. One reason, or the major reason, is because if you use a debit card online and someone gets that information, they have immediate access to your checking account, which could then go to your savings account. With a credit card, you have built-in protections, and you have these credit card companies who monitor fraud and fraudulent activity on a daily basis. Now, not saying that you won't get your money back with using a debit card, but there are usually a few more hurdles you have to jump in order to get that situation fixed. Um, Also, you have hackers out there and everything else. So use two-factor authentication, protect yourself, use a debit card. I mean, use a credit card instead of a debit card online. And also, hopefully you have some sort of virus protection on your computer. Now, these all factor into your credit, because if something goes wrong in one of these areas, it can immediately impact your credit report or your overall credit. Now, that I've discussed those minimal areas, I also want to talk about what you can do now. So I've told you about credit, why it's important, what you can, why it's important, why it's relevant to you, and I've talked a little bit about the credit report and score. But now I just want to give you just a few action items, things that you can do right now in order to kind of get on the path to managing your credit, making sound decisions that will positively impact your overall credit. The first thing there is educate yourself. By being here right now, you're taking the time to learn just a little bit more about credit. And as I mentioned, I am just scratching the surface with these topics, because I could spend hours on any of these topics. And trust me, I've done it in working with the Army, facilitating like a 7-hour workshop, well, personal financial planning workshop. And I wouldn't do that to any of you all. But just putting it out there, these topics, you can really get into the weeds with this information. The second thing you can do, protect your identity. Monitor your credit report. Use additional protection on your accounts as you log in. Third thing there, checking your credit report. And then the last thing there is start building up your credit score. Now, there are a number of ways you can build up your credit score. One thing that just stands out is if you have a credit card and you're not using it and you're thinking that that's helping your credit score, it's actually not. Unless you're using your credit card, or unless you have a balance where you're making a payment each month, you're not getting the benefit of that revolving history that tends to push up your credit score. So that's another thing to keep in mind. And there are a lot of little tidbits out there, but I just wanted to scratch the surface with this information today, and then open it up for any questions that you all have. But there are various resources you can use to build credit. And let me go to one of those real quick. Annualcreditreport.com. That is where you can go and access a free copy of your credit report. If you've never used the site before, I can give you a little background about it. So back in, I think it was 2007-ish, 2008-ish, when the stock market crashed, we had a lot of individuals who suffered from fraud on their accounts. So the government created a free place for individuals to go and access a free copy of their credit report. And annualcreditreport.com is what was created as a result of that. So it is legit. It's no hidden fees or anything like that with accessing your credit report. But more often than not, they will ask you to sign up or to pay for a free copy, to pay for your credit score. Now, the score isn't free, but the report, that is what's free. And that's where you get the most detailed information as far as any trade lines or any loans or anything you have out there, where you can verify information. Bankrate's a good tool to use. They actually have a number of financial calculators, whether it's a mortgage calculator, an auto loan calculator, a cost of living calculator that allows you to compare the cost of living in one area to another. So there are a number of good resources there. And then last, consumerfinance.gov. Go on and on, but these are just a few resources that you can utilize as you think about credit and anything else personal finance related. So now I'll go ahead and wrap up. I I know it was quick. It was really high level, and scratched the surface on a few different topics. But now I'd like to open it up for any questions you all have as it relates to personal finance or credit, and I'll take the time to answer those questions. Thanks for your attention.
All right. Thank you so much, Dr. Rogers. So yeah, if you have a question, feel free to unmute yourself, or you can chat it in the chat area of the meeting.
Gilbert, I have a question.
Sure.
With the history, so how far back do they go as far as your credit history? Is there a timeline there or not?
So they say 7 years. 7 years of information should show up on your credit report, but sometimes you'll see something that will show up from 8, 9, 10 years back. And what you can do is contact the bureau or whichever credit reporting agency, credit bureau that has that information, whether it's Equifax, Experian, or TransUnion. Wherever that information is showing up beyond 7 years, you can contact them to get that information removed. But I also add, if it is something positive that's helping your credit score, meaning you haven't missed any payments or anything on whatever trade line is showing up, then I wouldn't get that removed because it actually helps you.
Okay, thank you.
Thanks.
And then student loans, are they factored into a credit score? So from the standpoint of like you have one, and then once you graduate and start paying on that.
Right. So once you graduate, that information will show up. It'll show up on your credit report while you're in school, but it's still in a process of almost like being frozen, where it's not hurting you or anything like that. But once you graduate and you start the repayment, that loan becomes active where you're actually paying it, and it can impact you if you're paying it, good, if you're paying on time, but negatively if not. But anytime a loan is in deferment, it's still showing up, but it will show as kind of like in an inactive status where it's not negatively impacting you.
Awesome. And we do have a question in the chat. I recently talked to an AFC who works with refugees, and she said she learned that it is possible to have rent payments reported to credit bureaus to help them build credit. This was the first I've heard of this. How about you?
Yeah, that is actually rather new. I'm an AFC as well, so I don't know if you knew that, but I just want to add that. Yes, the rent payment thing is kind of new. It's something that companies who rent apartments or whatever out there, they're looking to kind of hold individuals more accountable. So they've gotten agreements as to where information can be reported to the bureaus, but if you've already been a resident at wherever you're living, you have to sign off and agree to that before they can actually report that information to the agencies. But yeah, that is something it's kind of the new thing with places that rent out apartments.
So do you think that would work just with like our TU apartments?
That's a good question. I'm not sure if they have that sort of agreement or if they've signed up to report that information. So that's a good one. I don't know the answer to that one.
Awesome.
Yeah, I've got a question.
Sure.
So how accurate are the scores on Credit Karma, and do you recommend using Credit Karma?
So yeah, so Credit Karma, I'm pretty sure they use what is called the Vantage score. The Vantage score is better than no score at all. More often than not, it can give you information as if something is wrong. If there's been fraud on your account, or if something hasn't been paid and it negatively impacts your score, then that can show up. But usually they may be 10 to 30 points off from your FICO score. So it can give you a good indication of where your credit is, but it's not that final score. And something as little as 10 points can make a huge difference, especially on a mortgage, when you have a mortgage. So that's something else to just keep in mind. So if possible, the FICO is the best, but a Vantage score or one of the other scores out there, which I don't know much about the other scores, but Vantage score, it's not a bad score. And actually, their scoring model, I think it actually depicts your situation a little better than the FICO score, because the Vantage score was developed by Equifax, Experian, and TransUnion, who are the credit bureaus. So I like their scoring model better, but the one that matters the most is, who's pulling your information, who's actually going to utilize that information to make a credit decision, and that's the FICO score.
Are there any other questions or?
Yeah, I have one more question.
Sure.
So how often should we be monitoring our credit?
So one way that I always suggest is, because the annualcreditreport.com website, they give you one free copy of your credit report from each of those credit reporting agencies, Equifax, Experian, TransUnion. You can stagger those out throughout the year, maybe every 4 months or so, pull that free copy, take a look at that, and then 4 months later, pull a copy from the other one. But if you have never done it before, you've never utilized that website, it's not a bad idea to pull a copy from all three, because sometimes information can vary from one bureau to another. Unfortunately, you want that information, if it's varying, to be, to work to your benefit. Or if there's something that's showing up on one credit report, with one credit bureau, that's not showing up with another, you want that information pulled over and added into your credit report. So you can stagger it out, every few months or so, to pull a copy just to see if there's anything crazy out there. But at least yearly, at least annually, I would definitely suggest pulling a copy of your credit report. And if you stagger those free ones out, then each year you're pulling a copy from each of those bureaus.
Thank you.
Thanks.
Steve, no questions?
I actually do have a question.
I feel like you did. I'm like, it's not a career chat unless Steve has a question.
I do have a question, but it's really off topic, and it's probably better for a one-on-one, or at least let people know that, hey, this has nothing to do with credit. This has to do with personal finance or investing.
Okay.
Do you have a position or any input on indexed universal life or tax-free index accounts?
I do not.
Fair enough.
As far as the depth of that goes into, I'll leave that alone.
Fair enough.
But if you want to send me an email, we can hop on a call and we could talk. But
okay.
Yeah, if we could do that.
I reached out to Clark Ritchie yesterday and I got a response. So
okay,
not Ritchie, Clark Howard.
Okay. I'm not sure I know Clark.
Clark.com.
Oh, okay.
So earlier you mentioned credit scores can be used in hiring. And so to have that almost authorized for employers to look at, would that be part of the normal background check that applicants sign, or is there a new form? It's been a long time since I've been hired for anything. So,
yeah.
So is it part of that background check, and that's when the credit score comes out, or is there a new form out that?
So more often than not, it's when you're hired into a government job, they will look at that credit score, especially if there's any kind of security clearance or anything like that that comes into play. As far as companies, they utilize that background check, which I guess if there's any red flag as far as a bankruptcy or delinquent account or something like that, it could show up. I'm not sure if they use the FICO score or if they use information that comes from the FICO score to make that determination, but they can use that. A lot of times with banks and financial institutions, they will check your credit.
That is really good info to have, especially as our students start, getting jobs and everything.
Oh, yeah.
So, yeah, like I did not know that. So awesome.
And there are also a number of ways to get anything that's not, how do I word it? Any inaccurate information fixed. You can reach out to the credit bureaus, reach out to them directly. If something is reported incorrectly, that can impact you. A lot of times medical bills are incorrectly reported for whatever reason. So that's something else to keep in mind. You can get information removed.
Very nice. Very cool. All right, are there any other questions? So in the fall, You all will be having workshops, is that correct? Or will they be virtual, hybrid, high flex, in person, whatever?
Yeah.
All
So
the words, all the.
so we have, over the summer, we've worked on at least 12 different workshops.
Oh, wow. Okay.
Everything from budgeting to maintaining credit, credit 101, to the basics of investing, to renting versus buying, car buying. So these are a number of workshops we've worked on over the summer that we will offer at least one per week. These will be virtual.
Awesome.
But if there's a request and, from students where they want something in person, then we could accommodate
Steve's
using
raising his hand.
using the right the method and the social distancing, social distancing and everything. But just getting the education out there. However, that's what we want to do.
Awesome. I love that. So we'll definitely promote it.
Actually, I have another question.
Oh, okay. Go ahead, Steve.
So while you were talking, I went ahead and pulled up annualcreditreport.com and pulled down Experian.
Mm-hmm.
And so you were saying that having credit cards but not using them is not really helping build your score. So I've got a few credit cards that are just, I've had it since 1993 and I haven't used it in a couple of years. So you're saying I should, like the last time I ordered from there, I just put it on my regular credit card. I should go ahead and put it on that company credit card and pay it off.
So the other side to that is length of credit history that factors into your credit score. So if you've had a credit card that extends that far back, I wouldn't close that card out. Close that account, keep it open. But if you're looking to push up your credit score by using the credit card monthly, that is what actually impacts that positive payment history and pushes up your credit score. So I wouldn't close an old account out, but if you have one credit card that you use, just use it, buy something, one thing per month. It could be gas, it could be Gatorade or something.
It's an AFES credit card. You're familiar with that?
Yes.
Army Air Force Exchange Service, for those that aren't. It's like when you go to the post exchange or the base exchange. But I the only thing I ever shop there for is my cologne because it's cheaper and it's tax free.
Tax free, yeah.
Yeah. So I don't have a need to use it monthly, maybe annually or semi-annually. But I guess that would count for other credit cards as well. I use my Firestone whenever I get work done on my truck, and then I pay it off in 6 months and get 6 months same as cash. I've got one that I use for my gas. I buy gas at Quick Trip, and I use their credit card, and I get 5 cents off per gallon. Plus, you can do the whole research thing. But you're saying use it even if you're going to pay it off completely, just use it, pay it off, and that'll help raise your score.
Exactly. Yes. Okay. That's the best way to go about it. Now, to add something else. Oh, sorry, I had a thought. With the with closing out accounts. So if you close out an account, a credit card or some other credit account, that can actually negatively impact your credit score because you have credit utilization, meaning out of all the credit you have out there, how much of that credit are you using? And that could, if you close down a credit card that has a $5,000 balance, but that disappears, then your credit utilization, how much of your overall credit you're using, could actually go up, and it could negatively impact your credit score. So that's something else to keep in mind. And also closing out credit accounts. A lot of times the bureaus, the credit reporting, credit monitoring bureaus, they can view that as being negative because they don't ask the question as to why you closed out a credit account. All they see is that an account was closed. They immediately assume that it's negative. Oh, you couldn't manage it, or there's some other issue. So you have to be careful with closing out accounts on your own, just requesting, and especially a credit account or a credit card that was just open, within the past 2 years or so. That can really have a negative impact on your credit score.
That's a good point. Thank you so much. So if a company tells you haven't used your card in a while and they will close it out, can they do that?
Yes, they can. They've done it to me a number of times. My dad complains about that all the time. He's like, they just closed my card out. They just want me to use the card so they can make money off of it. But yeah, you will see that happen, and it will show
Like
up.
a personal,
And it will show.
like you closing it.
Excuse me.
Would the credit bureau see that as you as the consumer close that card?
They just have on the credit report, it'll say account closed,
Okay.
but it shouldn't negatively impact you. But I'm not sure what the difference is or how exactly it's reported if you close it as opposed to them. But
Okay.
for some reason, when you decide to close an account, it could possibly impact you negatively.
Okay. Good stuff. All right, last call for questions. All right, checking the chat. Let's see. So, Dr. Rogers, I see the email address on the screen. TU Financial Wellness at utulsa.edu. So thank you so much for your time, and this will be recorded and placed on the Business Career Center YouTube channel. And I am looking forward to the workshops in the fall. If you don't mind having a random staff member sit in.
Not at all. Not at all. I welcome as many, whoever wants to come.
So anything we can do to help to promote, definitely let us know. But we appreciate you taking time out to do this weekly chat with us. Very good information. So thank you so much. And last question I have, you all have a website, right? I haven't been on UTulsa's website in a while. So
we're on the webpage under student experience.
Okay.
We have a page on there. So
Okay, awesome.
It's fairly new, but yeah.
Okay, cool. And services are open to alumni as well, correct?
Yes. Yes. Anyone affiliated with TU, more than happy to work with you and help.
Awesome. Well, thank you so much. And thank you to everyone who joined us today. And next week we'll be off. So not a weekly career chat next week, but we'll be back July 8th, where Philip 66 will present to us about inclusion and diversity in high-performing teams. So look forward to having you all join us then. And thank you again, Dr. Rogers, for presenting today.
All right. Thank you for having me.
Thank you, Gilbert.
All right.
Bye,
Thanks.
everyone.
Bye.
Bye.
Bye.